Good afternoon, guys. It's Working, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. Sorry about the lack of updates over the last few days, guys. I've got a place in Florida, and we've been dealing with a hurricane for the past week. So it's been hit or miss. Fortunately, we got very lucky. Those in the Bahamas didn't. So certainly sending out some thoughts and prayers to those in the Bahamas, man. They just got drilled. So anyway, guys, if you're in a position to help them, by all means do so. But yeah, certainly sending out some thoughts and prayers their way. Anyway, let's dig into some Bitcoin here. Looking at Bitcoin to the US dollar one-day chart on Coinbase. Last time we spoke, Bitcoin had broken down below 10,000 and it found support right around 9,400. I did tell you guys to expect a bounce here once, maybe twice, but to be completely transparent and honest, guys, I didn't expect 9,400 to hold this time. Of course, it wasn't out of the realm of possibilities. And I did tell you that if we did end up holding, if 9,400 held as support, that was going to confirm an overall descending triangle pattern, which I know is not news. Everybody's talking about this now. But that is exactly what we do now have. We now have a confirmed descending triangle, which means if this is in fact the case, which it is, then very likely we're going to get some sideways movement for the next few weeks within this structure. Now, that just because we're moving sideways doesn't mean we can't have some significant moves here. I mean, we do have a as of right now, we do have this descending resistance line here that price could come up almost as high as about 11,000, and of course we do have this $9,400 base. So yeah, bouncing back and forth between those is not out of the realm of possibilities. But and I know you guys hate to hear this from an analyst, guys, but it's rather boring. But that's what it is right now. It's rather boring. Until we do break out of this overall pattern, this consolidation pattern, we're not going to get any of those major moves that everybody is hoping for, whether you're bullish or bearish. We've got to get out of this consolidation pattern before Bitcoin's going to get some major moves. And bouncing back and forth between support and resistance, until that does happen, it's just not sexy. It's just not, I understand it's not something that you want movement. You're in this thing to trade. You're in this thing to make money. And anytime Bitcoin's moving sideways, it's a little bit frustrating. I get that. But again, it is what it is. So let's dig in and see if we can find out where Bitcoin is going here in the short term. It does look to me like, let me dig in here to the 4-hour actually. You guys get a little better view. So we came up here and we tested 10,650, this support here. Came up a little bit higher, tested about 10,000, almost 10,800, but we can see the body is right around 10,650, our known area of support that we've had marked off forever. Now, since we did break down here, guys, we are testing a critical area in the short term, not in the long term. Long term, we're still in a basic consolidation pattern, massive consolidation pattern. In the short term here, though, we are coming down and testing this area right here, which has, of course, been over the last couple weeks, which has been a major area of resistance. We finally broke up above it, and that area of resistance is starting to act as support. If this can hold, and if we can break back above 10,650, I do think there's a good chance that we come up here and test at least 11,050, if not the top of our descending resistance line, the top of our descending triangle, which would put us somewhere around 11,200, maybe even 11,300-ish, somewhere thereabouts. But that's a big if. Right now, we got to see if we can break above 10,650 decisively. In other words, a 4-hour candle opening and closing above 10,650. Again, if that does happen, I will expect the price to continue up to about 1150 at least, if not 11,200. However, if we do end up closing a 4-hour candle opening and closing, a decisive break below this area of what is now acting as support, which sits at about 10,400, call it 10,430, but really let's call it 10,400. If we get a 4-hour open and close below 10,400, I do think it's going to be a quick drop back down to about 10,000, really 9,950-ish, maybe 9,000 or maybe 10,100, somewhere in this area right here. I would expect to test, and I would expect a bounce off that area, a very small bounce off that area, back to up about 10,300, 10,400 if it does come down this low. That being said, if 9,950 does break, it might. As I said, I would expect maybe one bounce off there, maybe two. But on the second test, if it does end up breaking down, of course, we're going to come right back down to 9,400. And the same thing applies, as I said before. Remember when this thing broke down here, I told you it looked like a bear trap on my last video. Now, I was expecting, to be fair, I expected it to come much, much lower. I expected us to test somewhere around 85 to 8,900. That did not happen. However, if we do break 9,400, I will still be looking at 89 to 8,500 for a potential area of reversal. Doesn't mean it has to happen, but we cannot forget, and I know this, you guys are sick of hearing about this, and I get it, but we can't forget that we do still have these gaps on the CME chart, guys, that are between 85 and 8,900 that will eventually well, I don't want to say will. Then nothing is probable, nothing is for certain in Bitcoin, but probability says will come back down and get filled. This gap will eventually get filled. It doesn't have to be today, it doesn't have to be tomorrow, it doesn't even have to be a year from now. But at some point in the future, this gap will get filled. And personally, I'd like to see it happen sooner rather than later. Now, Bitcoin doesn't care what I think. We all know that. But again, just logically, I'd like to see this get filled before we end up breaking out of this consolidation pattern. So before Bitcoin takes off, I'd like to see 85 to 8,900 get filled. We'll see if it happens. We do now have a gap right around between 10,100 and 10,400. We're kind of testing the top of that now. We'll see if we can come down and fill this gap here in the short term. As I said, I think we're at a major pivot point where either we are going to come back down and fill this gap, dropping as low as about 10,000-ish, or, as I said, we'll break off this area, and if we get above 10,650, I think we're going to test 11,000. We do have a very small gap up here at about 11,700 to 11,900 that, again, will eventually get filled, but there's no rush. But you should be aware of these gaps. We are basically sitting in between, gaps to the upside, gaps to the downside. And again, I personally would like to see this gap get filled down here in 8,500 before we continue to the upside. Now, zooming back out here to the daily, we are in an overall bearish pattern. Of course, the descending triangle is a bearish pattern. That's not news to anybody. But not all descending triangles are created equal. In other words, if we zoom out here over the last 9 months, clearly we're in an overall uptrend here. Some would call that a bull market, whatever you want to call it. It's an overall uptrend. And when you see a descending triangle in an overall uptrend, the probability of a breakdown, while it is still more probable, a breakdown is more probable than a breakup, it's significantly less when you're playing off of an overall uptrend here. And I can't remember the exact numbers. Someone's going to have to correct me here, but it's somewhere around when you see a descending triangle in an overall uptrend here, it's somewhere around a 55% chance of breaking down, which means you've got a 45% chance of breaking up. So not quite 50-50, but very close. Still, the odds are in favor of a breakdown. We can't ignore that. But if we had been in a bear market or a downtrend, the odds go up substantially of breaking down to about 65%. Which means there's only about a 35% chance of breaking to the upside. That's not what we're in now. We're in that 55% chance of breaking down, which means a break to the upside is not out of the realm of possibilities here. So I want to make sure I'm very, very clear on that, guys. I still do believe that once we break out of this formation, my bias is still a break to the downside to at least fill the gap at about 85 to 8,900. But again, to be completely transparent, a measured move on this thing would bring us all the way down to about 7,000, maybe the upper 6,000s here, but very likely 7,000, maybe 7,200, but that would be the measured move off of this thing. I still think that a bear trap is very possible. I still think that most people think this thing is going to break down much further. That's the general logic. And of course, there's a very good case for that, of this thing breaking down much, much further. There's a very good case for that to be made there. So because most people are looking at that, this is why I do think a bear trap is very, very real possibility. And again, I think 85 to 8,900, that gap right here, I think is a very logical area to look for that reversal. At the very least, look for a bounce, but look for a complete reversal in that area. It doesn't mean it's going to happen. It just means I do think that we are certainly seeing the signs and the makings of a potential bear trap. And as long as everybody remains bearish, or the majority remain bearish, that's going to be a very, very real possibility. If we do break to the upside here, guys, we are going to need to clear above this descending resistance line. That's going to bring us up a current price point would bring us up above about 11,300. So let's call it 11,500. 11,500 has been a major, major area. In fact, if I go back here and zoom out to the weekly chart, guys, and get rid of all the noise, we can see 11,500 was a very, very relevant zone. We're looking at Bitstamp now. When price broke down from the ultimate high at 20,000, we found support for about 3 weeks right around 11,500. Then price broke below that area, came back up. What was support acted as resistance at 11,500, of course, and then we tanked down to about $3,150, the 2018 low. Of course, we're seeing resistance right at the 11,500 mark again on the way back up here. Now, as someone pointed out in the past, this mark is not exactly 11,500 on all exchanges. On some exchanges, it's a little bit higher. On other exchanges, it's a little bit lower. But it's this area, wherever this support flipped to resistance back in February of 2018, that's the area that we're going to be watching. Again, some exchanges it'll be 11,600, other exchanges it'll be 11,400, but it's going to be roughly around this area. And in fact, if you draw from the ultimate high to the ultimate low, $20,000 high to the $3,150 low, you're going to see, let me get right at that $3,150. So I'm not quite on it there. And right on There we go. We can see that we're literally almost to the dollar finding resistance right at the 50, right at the zero point 0.5 Fibonacci level. And of course, we can see, as we discussed before, the wick came right into the golden pocket between the 618 and the 65 here, which is not a surprise at all. So we are seeing a lot of structure in this market, and if we can see the weekly candle closing above 11,500 on Bitstamp, again, it'll vary a little bit depending on your exchange, but if we can get the weekly candle closing above the 50 Fibonacci level, I do think that's going to usher in much higher prices very quickly. That being said, watching this to the downside here, we can see that we've wicked down all the way down to about $9,000, and we can see 9,000 is where this split basically on the week of June the 10th. And between the June the 10th and June the 17th, that's where this price point kind of flipped right around 9,000. So 9,000 is going to be a decent base. In other words, if we do break below 9,000, I do think that we have a good chance of going much lower. Now, we of course, as we discussed, we do have that area right around 8,500. That's a potential area for a bear trap reversal, and I'm going to be watching that area very closely. But there's no question if 9,000 breaks, there's going to be a very good chance of much lower prices again. First target would be 8,500. Second target would be probably about mid 7,000s, and then of course 7,000 below that, upper to 6,000s below that. So that's the kind of the area that we're going to be watching if 9,000, the areas we will be watching if 9,000 does break. But clearly, guys, we are stuck between the 382 fib level and the 50 fib level when measuring from the ultimate high to the ultimate low here. And until we get a decisive break above or below one of those, we are going to more than likely just consolidate sideways. Now, putting up our indicators, looking at the weekly RSI is still sitting up above that about 53. This is the area that I discussed earlier, guys. In fact, let me blow it up here so you can see a little bit better. This is the area right around 53. If we go back in time here, we can see during the bear market that acted as resistance, and then finally we broke up above it, which ushered in the bull market, and then it acted as support basically all throughout the bull market of starting in October of 2015 until we broke down below it in January of 2018. And then what was support flipped back into resistance again right around that 52.9 to 53 area on the weekly RSI. So my point in all that is, as long as we are above that area, guys, the overall macro uptrend is still intact. Once we break below that, that's when I'm going to start to get very concerned. Coming in here to the daily, right around that exact same area again is a pretty good control point, a pretty good area to judge whether or not the overall trend is bullish or bearish. We broke above it here very briefly, and now we're coming back down and testing it. I do think if we do drop down below this 52.9 on the daily, we could be coming back down to test that $10,000 area, if not that $9,400 area. But the one that I'm most concerned with is the weekly here. This weekly has got to stay above about 52.9, 53, in my opinion. To keep this overall macro uptrend intact. As soon as it does drop below that, sorry guys, didn't get much sleep last night, having trouble speaking here. As soon as it does drop below that, that's when I get very concerned. Checking our moving averages, exponential moving averages, we can see that we are above the 821 and 55-day EMA. That is bullish here. We are above the 21-day EMA. Again, a bullish sign overall, but the fact that we have the 821 and 55 so close to each other here, guys, this does indicate very likely once we do break out of this pattern, once we do break out of the overall massive descending triangle that we are in, we very likely are going to get a much larger move. And I know that's getting frustrating to hear because I've been talking about how close these exponential moving averages are, the 821 and 55. We haven't seen the 821 and 55 this close on the daily since we broke up above right here back in April. On April the 2nd was the last time we've seen them this close. And of course, the more we just consolidate sideways, the closer they get. And the closer they get, the more pressure is built up, and typically that ends in a major explosion. Now, again, that doesn't have to happen anytime soon here. In fact, I would start watching these daily Bollinger Bands. Once the daily Bollinger Bands start to constrict, start to bottleneck very tightly, kind of like they did right here before we had that massive explosion. Also, right here before we had that massive explosion. Once you start seeing that in combination with the 821 and 55 so consolidated on top of each other, that's when you're likely to see that much larger move to come. And switching back out to the daily, putting on our volume profile here, we can see that the volume signature does agree with that. In other words, volume signature is continuing to get a series of, there we go. A series of lower highs is continuing to get, basically lower highs here, consolidating tighter and tighter. And this actually would suggest a breakout probably by the end of the month. probably the last week of September would be what this would suggest. Now, of course, that's just going by volume profile here. It certainly doesn't have to happen there. And of course, looking at this overall descending triangle, if we're looking at the apex here, we wouldn't expect it to happen until somewhere around the mid-September at the earliest, if this is in fact a correct representation, which I do think it is. That being said, that's not the only way to draw this. You could actually draw this, if I'm more of a purist, I could actually draw this descending triangle from the ultimate swing high right here off of the wick and bring it right down just like this. And this would actually make a lot of sense with this latest rejection right here at about 10,800. So we could say that we rejected off the top of this descending resistance line here, which again would come in nicely with the other. We'd only have to cut off one wick here, and would come in very, very nicely if it does end up rejecting right here, would suggest a break back down to about 9,400. And we can see that if that's in fact the case, we can see we'd be coming up on the apex. We're actually already in basically the apex of this wedge, which would mean we could break out at any point in time, if that is in fact the correct way. Now, that's not the way that I'm really drawn. I do think that the first way that we had drawn here is more of an accurate representation of what's going on here. But if we do see a break up above 11,000, certainly if we see a break above 11,000 or a break below 9,400, then of course the measured move based off of this pattern, this descending triangle here, would be probably more of an accurate. Let me kind of get rid of this here. There we go. Something like this would probably be more of an accurate drawing of what's going on. And of course, then we'd be looking at a measured move. Again, probably that'd bring up the measured move to about the mid to upper probably the mid 7,000s actually. But not much of a change at all, to be completely fair here. But we're not there yet, guys. We have not, I still do believe that we have more than likely this is more of an accurate representation of what's going on here. So time will tell. Now, I will say this, again, getting rid of all the noise on the chart and just looking at a fairly clean chart here, I will say this, if we do end up breaking up, I know I haven't talked about targets to the upside, so people have asked me about that a little bit. So targets to the upside, if we do break above 11,500, immediately I'm going to be targeting the prior high right around 13,850, around $14,000. We can see that not only was the prior high here, which means that naturally is where price would start to gravitate to. We can see that was a major area of support right back here. And it's no coincidence that that's exactly where price ended up rejecting off of. So right around that $13,800 to $14,000 area, if we do get a decisive break above 11,500 on the weekly, I do think it's going to gravitate very, very quickly to that area. And I do think if it does, I do think there's a very good chance that this area does end up getting taken out very quickly. And if that does get taken out, we can see that what would be the next logical target would be right here, where price found, again, resistance on the way up, which would be right around 16,000. Let me get right on there, 16,100. Now, it's not only visually that we're looking at these targets up here and trying to figure out where price would go if it does end up breaking to the upside here, but this is also backed up if, again, I pull out my my fib level, or excuse me, my fib retracement tool, and I just go swing high, swing low. We can see, again, we're stuck between the 382 and the 0.5 Fibonacci level here. Let me get right on there, because this is just it's beautiful how this thing is just playing out perfectly here with a lot of structure. We can see that would bring us, if we break above the 50, that would bring us naturally right up between the 618 and the 65, which would be the natural next major Fibonacci level to the upside. Again, bring us right around to that $13,800 to $14,000 area. If that gets taken out, we can see that naturally we saw the next visual area of support, as I said, was right around 16.1, 16.2, and what's the next major Fibonacci level? The 786, right there, 16.1, 16.2. So we can see that we do have a lot of structure to the upside here, and if price does break up, those are going to be the two major targets that I'm going to be watching. 14,000, really 13,800 to 14,000, and 16,100 to 16,200. To the downside, if that $9,400 area is broken, if the 382 Fibonacci level is broken, of course we will have a little bit of support right around 9,000. If that gets taken out, yes, we'll very, very quickly probably find ourselves, as we discussed, a measured move off of this thing brings us down to about 7,000 to 7,200. And of course, what's the next major fib level? Sitting right here, the 236 is right there at about 7,100 to 7,050. And again, it'll vary slightly depending on your exchange, but this is the next major fib level you'd be talking about, and that would be basically the measured move off of this major structure that we are in now. So we can see that there's a lot of structure that we're seeing within this market. If I pull out to the monthly, and if I look at a break to the downside here, 8,500, which we know 8,500 would close the gap, that CME gap, right? 8,500 is an extremely relevant zone. and I know we've discussed this in the past, but basically looking at the monthly, that was the last swing high of the bear market before price broke down to its bear market low, 2018 low of $13,150. That was right here, basically in July, was the last green candle of the bear market on the monthly chart. And that came up to where? Right here, 8,500. That was the swing high of this candle. Why is that significant? Because if we fast forward over to this bull market breakout here, we can see that basically in the month of May, that's exactly where price found support. And then support turned into resistance in the month of June, right there at exactly 8,500, almost to the dollar. So we can see if we did break down, this would be a very, very logical area to expect a bounce, or a very logical area since everyone's going to be looking at probably the lower 7,000s, or this monthly candle here, basically the June candle, the low of the June candle, which is about 7,400. Everyone's going to be looking at the low 7,000s if we do get a breakdown. So of course a reversal right around 8,500 would make logical sense. Now I'm not saying it's going to happen. I want to be very clear, guys. I don't want to send you mixed messages here. I'm saying that I'm going to be looking for a bounce here, and I'm going to be entering into, I will very likely buy some positions at about 8,500, between 85 and 8,900, but that does not mean it can't go lower than that. In fact, it can. So I mean, be very, very careful. I'm not giving you financial advice. I'm not a financial advisor here, guys. I'm just telling you kind of what I'm thinking, what I will be doing, and if that works for you, great. If it doesn't, do what you think is best for you. I don't know you. I'm just kind of giving you what my thoughts and my ideas are. To the upside here on the monthly chart as well. Pardon me, 1 second, guys. Okay, I had to get a quick drink of water. If price does break to the upside here, we can also see on the monthly here, this is the monthly topped out. The body of the monthly candle is topped out right at about $13,900, which coincidentally or not so coincidentally was exactly where this candle topped out during this bull run here in June of 2019. So that's not really a coincidence in my opinion. So again, if price does end up breaking up here, guys, it's going to naturally be attracted right there to that $14,000 area, 13,800 to 14,000. We can also see that looking at if price does break down, just kind of giving you, I don't mean to sound like I'm all over the place, guys, just kind of giving you an idea of where we're seeing so much confluence with so many indicators here. Right at around 8,500, if I switch over to the monthly chart here, that's exactly where the 8 monthly EMA is, right at about 8,500. So if price does break down, we can expect to find some support right around that area if it, again, if it does break down. That being said, we can see that the 21 period EMA on the monthly is right around 7,000, 7,050, which would be almost exactly the measured move off of this thing, so off of this consolidation pattern. So again, you can make a bullish or bearish case either way. I do think a case breaking down to at least 8,500, there's a stronger case to be made to break down to 8,500 once we do break this overall descending triangle formation. There's a stronger case to be made for a breakdown to at least 8,500 versus a break to the upside, but it's not much stronger. Again, I would go with those numbers that we talked about earlier. About a 55% chance of breaking down, about a 45% chance of breaking up. Checking overall daily volume sitting at about 16.1 billion. So again, a whole lot of uncertainty in this market, guys, and that that everyone's waiting for the breakout, but no one's ready to go all in. And of course, understandably so. Why would you go all in this market when we're sitting in a consolidation pattern that literally almost has a 50-50 chance of breaking to the up or to the downside? About again, not quite 50-50, but you know what I mean. A good chance of breaking up or a good chance of breaking down. I know that's frustrating to hear, but that's the situation that we're in. And if anyone tells you any differently, guys, I don't want to say they're full of it, but they're full of it. Looking at the overall daily volume over the last few weeks, guys, we can see that we've seen this pattern. Everyone's getting excited. Volume spikes. Everyone again realizes we're still in the consolidation pattern. Volume drops. Volume spikes. Price goes up. Everyone's expecting us to break out. Then everyone again realizes we're in the consolidation pattern. Volume drops. It over and over and over again. This latest dropping all the way down to about 11,000, spiking all the way up to about almost 20,000, and then baselining again right around 16,000. So this pattern's been going on and on and on for about the last, as you guys know, for the last few months. Now, yeah, we can see that we did get our break, our bounce right around that $10,400 area, as we discussed, guys. Looks like, as we discussed, it may want to come back up and test this $10,600 area, as we just discussed earlier. So again, as I said earlier, guys, if we do break above $10,650 decisively, in other words, a 4-hour open and close above $10,650, I do think that we're going to get, I do think probability will be a break to the upside of testing at least 11,050, if not 11,200 to 11,300, the top top of our overall descending triangle formation here. Again, doesn't mean that's going to happen, just means I do think probability would be in favor if that does happen. As of right now, we are still trading between support at 10,400 and resistance at 10,650, and until one of those two does break, again, if it breaks to the downside, I'm going to be watching 10,000. A break to the upside here is going to be watching 11,050. So just kind of to sum things up, guys, that's kind of how I'm playing it. Basically, I'm not playing it until I get an indication, a decisive break to the upside or a decisive break to the downside. Now, my personal trading, I will probably be trading with smaller time frames, and I won't necessarily be looking for a 4-hour trade. But for our purposes here on YouTube, guys, I don't want to give you any kind of yeah, I'm not comfortable giving you any smaller time frame other than a 4-hour because, you know, things change so quickly in this space. I'm just not comfortable doing it. All right, so to wrap this thing up in a bow, guys, I'm coming back out here to the daily. Very likely we're still going to be consolidating sideways, in my opinion, for, you know, at least another week or so. More than likely, the fact that 9,400 did end up holding up here, guys, was very, very, very telling. So again, more sideways movement for at least another week or so, in my opinion. That being said, if we do end up breaking above this descending resistance line, which again would bring us above about 11,300 at its current price point, or below 9,400 decisively, a decisive break above that area or below that area would very likely trigger much, much lower prices or much, much higher prices. Until that does happen, we are still consolidating sideways, getting squeezed tighter and tighter within this descending triangle formation, and we'll have to wait and see kind of how that ends up playing out. I know that's frustrating to hear, guys, but you know, unfortunately, sometimes TA is just more of you know, more sitting around and waiting than it is anything else. And frustrating as that is to hear, that's just the way it is. So I'm gonna go ahead and wrap things there, guys. If you do have any comments, questions, suggestions, please let me know in the comment section below. As always, would appreciate an upvote. If you have enjoyed this content, please remember to like, subscribe, hit that notification bell in the bottom right hand corner. Until next time, guys, please trade safe, take care of yourselves. This is Working. Sign it.